Monday, welcome back to the final hour. It is just after 3 p.m. on Monday, June 2nd. We're kicking off a new month. Looking ahead this week, we're having some rate cuts coming in from Canada and the European Union. Wednesday, Bank of Canada expected to cut rates by 25 basis points. Thursday, ECB expected to cut rates by 25 basis points. We had ISM manufacturing today. We have ADP numbers on Wednesday, unemployment claims Thursday, non-farm Friday. Markets are still inside the big 3-week window. Things are pretty sideways on SPX, SPY, QQQ. We're not breaking highs, not breaking lows. Something's going to happen. I just don't know which direction. I think the pain trade is still the upside. We're looking for this melt up to continue. I'm trying to be opportunistic and wait for a pullback. I hope I don't miss out on that. But I'm not bearish. I'm just looking for opportunities to hopefully position for better entries and a bit more volatility. I did take some fresh trades today. I added some trades on Palantir this morning. I added a trade yesterday on ES. So the S&P futures, I put a bit of a skewed iron condor on Palantir. I did a ratio spread today. I'm looking at some out of the money debit spreads on Meta and Amazon. I've got some trades on the Dow. Anyway, let's jump into the charts here and let's have a chat. Just finished up a good class with my pinch point masterclass. We found a trade today. KMI is now live. So that brings me to, since launching the pinch point last week, that gives me trade number 10 in my service. GNRC, that trade is in as well. This one was not exactly the pinch point logic, but I took the trade nonetheless because I like it. So this is an 85 by 80. So this one is GNRC. Took this trade last week. This would be open for 3 days. So that would put me at what? 1, 2, 3, the 30th. So I buy the 85, put, sell the 80, put with 2 contracts, pulled in about $1.40. There. All right. So I have trades running on Verizon, DJT, ASTS, SBUX for Starbucks, KView, BSX, HCGC, GNRC, NWSA, KMI. All looking for some trades. This would be the sell 32 call on KMI from today. See if we can turn those into some profit. All right, what's happening, Kevin? How are you? Lakeland, Florida. I bought an old motorcycle there in Lakeland, Florida. Ended up buying a Suzuki Katana back in the day. It was like a 750cc, one of my first bikes in Florida. And rode that thing like all summer. And then upgraded to a GSX-R 1000. Upgraded that to a Hayabusa. Sold that for a Vulcan, I think. And then went back to a GSX-R 1000. Then went back to a Rocket 3 from Triumph. Went back to a Hayabusa. And that was my last bike. So anyway, Lakeland, Florida. Okay, looking for income. So what I mean by this is I have some covered calls. I mean, prices are pretty calm right now. I'm expecting either more calm until the market just kind of waits for this like July window. Maybe this trade war pause is done. But Tesla, IWM, MicroStrategy, SPY, and then I'm looking at TLT and UNG. These are all either diagonal spreads or own shares with covered calls. I could do the same thing here on Snap, but I don't really get a lot of premium for the covered calls. I could do the same thing on Lyft, but I'm looking to see if that price will just appreciate. IBIT. So I could potentially put these in here as well. Snap, Intel is another one. But these are the main ones because every like 1 to 2 weeks, I've just been rolling calls. Tesla, I've increased. I've already made about 15K on Tesla this year, and I'm hopefully looking to make a lot more. This next chunk and tranche, since I'm rolling calls pretty consistently every couple of weeks, I have 300 shares of Tesla. So I have, let me see here, Tesla, I have about 300 shares I have 400 shares of Tesla. Russell, I have a bit more. I think I have 1,100 shares of Tesla or IWM. So 400 shares, 1,100 shares. MicroStrategy, I have 300 shares. SPY right now, I have 200 shares. TLT is all diagonal spread. and UNG is a diagonal spread. So what that means is I'm going, I have a long dated call option and I'm selling premium against it with shorter dated. So I'm going out like 2 years and then selling like 30-day options against it. And neither one has been called away. So my TLT is I want to say an $86 or $87 sell call. Or maybe it's 89. I could double check that here. UNG, I've rolled that thing down to 17. So if they get called away, I'll exercise the long call and the sell call together, and I'll get it called away for income. And then spot. I mean, I'm just going to keep rolling calls here. So I'm going to keep rolling calls here. Every time I roll this, if I can get anywhere in between $1 to $2 every 1 or 2 weeks, $1 to $2 every 1 to 2 weeks. This one's probably a little bit higher. I should get closer to like $3 to $5 for 1 to 2 weeks, and the SPY typically about $2 to $3 every 1 to 2 weeks. So if this is just income, let's say I go out for a month. Okay, I go out for 4 weeks, and this is just kind of hypothetical here. But if I go out 4 weeks and I can get 2 rolls in Tesla, 2 rolls in the Russell, I can get 1 roll on MicroStrategy and 2 rolls on SPY. I'll go low end. So I make, let's see here. This would be $200 on Tesla. So make another, $200 on Tesla times 400 shares. Make another $200. Well, let's just say $100. $100 times 1,100 shares. I go MicroStrategy, another, let's say $300 times 300 shares, and another $200 times 200 shares. So if all this is income and nothing really happens in the market, this should help me at least make, so that's 800, 1,100, or is that 11? Yeah, it's 1,100, and then another 900 and another 400. So that's another $3,200 without prices really having to go anywhere. Tesla's in the money. IWM is slightly in the money. MicroStrategy's in the money. SPY is in the money. I mean, so all I'm going to do is roll. And that's a pretty safe way over the next maybe 2 to 4 weeks to generate another $3,000 without taking a ton of risk, and just, either 1, lowers my cost basis, or 2, just helps me generate income. But it's not a bad thing. So in a month, if I can make $3,000, that's pretty good. By really prices being relatively boring, And if something gets exciting, well, fine. Things get exciting and we'll position for it. If something gets exciting, I mean, realistically, I'm hoping that this gets exciting. It's not intraday stuff. Like this is my daily profit play this morning. We took a trade this morning, watched prices go down, came back up. We hit 20% profit on 4 trades today. So nice little win on the day. So we're 4 for 4 out of the gates. That's pretty solid. But I'm looking at, some pullback levels. So let's go to the weekly time frame. I still think this is going to matter. This week with non-farm, this week with kind of kicking off the first month. June is usually not super bullish. In fact, I would say on the shorter time frames, let me go down to a chart that has some momentum and relative strength. Let's go to one of my other workspaces here. So look at this. Let's see here. Mighty Macro is one workspace, one of many that I have. Let's go SPY. Okay, so the daily time frame. Can everybody see this? So we're getting a crossover on the SPY with the MACD. We're also getting some divergence. So even though price might go slightly higher, I would think this is a bit of a fake out trade. I just think that the near-term trade is going to be a pullback. So we're getting a crossover on the SPY. We're getting a divergence. So even if we go slightly higher, I think that's a bit of a fake out trade, and we're probably pulling back into this gap. We are very close to overbought conditions on relative strength. We are also seeing if prices are going to make slightly higher highs, we are going to see disagreement in relative strength. Money flow is sideways. So if money flow is back up towards these highs or these highs, you can see that those have often related to tops in the market. So if we see this money flow indicator back up to like 0.4, I would be looking for some type of correction. So I just think we're much closer directionally to a correction than anything else. Larry says made 50% of daily profit play. What? Larry, that's crushing it, dude. 85 contracts, huh? What'd you pull in? What was your trade? Did you take the trade with me for like $2? We had some trades for like $2, $1.55, $2.25, $1.80. What were the trades from this morning? I had a 175, a 235, a 155, and a $2. I mean, if you did, let's just say you did the $2 one, $2 down to $1. I mean, that's making some fat cash today, Larry. That is $1 on 85 contracts. That's some good cash, dude. It's making some 4-digit gains, and out before noon, even better. Even better. Yeah, great stuff, man. Very nice. Okay, so does that make sense on the potential like divergence that we're seeing here? I'm just watching the weekly time frame. I think that we have resistance, support. If we poke these highs, I think it's a fake out trade. I get it. Like, this market might not care at all, and we're just melting up to all-time highs. I've said this now for the last couple of weeks. Like, this might be the pain trade. The market doesn't care. The market's going to melt up. We hit all-time highs. My only concern with that is we hit all-time highs, and then something lines up for this thing to end up still filling a gap. So I probably will take, if you're in my Crash Insurance Masterclass, we're going to take some cheap hedges there, just in case. But otherwise, I'm hoping we at least have a pullback to kind of fill this U.S.-China trade agreement gap and to make things a little bit more exciting to hopefully buy the dip and participate in something good. I'm not saying I can't participate in the highs. I've got new trades in. I put a 111 trade today for waterfall income in the Qs. I did a 111 and a 1111 for the QQQ trade on Qs. For my waterfall income class, we have about $3.32 of income in the next 60 days. That's high probability. So we'll make a few $100 there. That's fine. I'm doing this on 11 accounts. So if I make $300, $3.32 times, that's another $3,600 in the next 60 days. So just generating some income. It's just trying to participate, but do it safely. 240 out of 120. That's awesome, Larry. Good stuff, man. So 120. Larry, did you make 10 grand today? Ooh, baby. Larry just killing it. That's pretty cool. All in a day's work, huh? By the way, silver is looking fantastic right now. SLV today is doing some serious work here. I do have some covered calls. I need to be mindful of this. I don't want this to get called away. Silver, I go to the whole portfolio. SLV here. I have plenty of shares. Let me add this up here. I've got like 2,000 or 3,000 shares of SLV. So 200, 300, 300, 500, 200, 300, 600, 500, 300, 500. I have 3,700 shares. Right now, June 20th. Let me see what the expected move is here. I've got all my calls. I got a $33.50, a $33, and a $34. Let me see where the covered calls are at for June 20th. So this is the higher end of the expected move. I do not intend to get the shares called away. I'm going to maintain my shares of silver. This has been one of my more bullish positions the last couple of years. And if we are breaking some new highs in silver, I want to be running with that. So here's SLV, $33 call. I'll just put a horizontal line here. Let's go 33. So $33. This is a SLV covered call. So that's my lowest strike. And I have $33 covered calls, $34 covered calls, $33.50 covered calls, all same expiration. So this June 20th expiration, you can see here. So my 33 covered call, my 33.50 covered call, my 34 covered call. There is a potential chance that this finishes at the money or even in the money. If that's the case, I would be losing the shares. But like I said, I'm going to roll this. So hopefully, fudge. Well, it depends on how aggressive it is. I mean, if silver is going to catch up, and here's one way to judge it. If XAU, XAG is going to start breaking lower, here's a daily chart. If we start breaking lower and silver looks like it is running better than gold, if we get a bit of a gap fill here, then let me see what I'm in. If I'm in 90+% profit, let me check. So this covered calls, it's only up about 31%. Son of a biscuit. So I'm going to hang on to these trades a little bit. So I've got June 20th and June 30th expirations. Let's go June 30th here. Yeah, so I'm on like the far end of the expected move on the bullish side. So there is that price appreciation. Price would have to go up another $1.50 to $2. If it gets called away, I don't. Okay, I mean, I'll just make a decision. Like right now, I mean, my SLV positions as a whole are doing pretty well. Right now, my SLV is up around $21,000 in open trades, up for the year about $28,000. But I don't want to cap it and say, well, I'm no longer getting into silver. I've been pretty bullish now. It's been like a 2-year run. I've been pretty bullish on this thing for a while. Are we going to finish at 59.50 today? I said that back at like 59.20. We just keep melting up higher for a Monday. This is price action today on the SPX. Intraday levels. That was a 6.2. That's a 6.2. Like the bulls have just kind of slowly taken control after a bit of, the market sold off. You buy the dip and it's going up. It's what the market likes to do, I guess. I still think there's heavy resistance around this like 6,000 zone. We might not even get there. You look left on the chart, we've had some indecision here. Indecision or should say resistance. So we could hit some resistance. And why say that? Because if we hit these highs, look back at that higher time frame, we've got the MACD crossover, we get slightly higher highs in price but disagree with momentum. I could see this area being a bit of a fake out trade and then the market fades. So we still have some gaps to fill down here. We still have a big gap to fill down here. So I'm just a little cautious, buying into this move up outside of some intraday day trading. OLLI on earnings tomorrow. Bargain outlet for $112. Well, we got a big range on this one. Let's see what the market makers show. OLLI. If I can trade a Friday expiration, so nope, I can just trade them. No, that sucks. If I could trade Friday, I might look at like an iron fly and see if I can just pinch it in between. Probably not. $5 wide strikes, I don't really like that. If I were to, sell the 110, sell the 115, expected move is $10. So I buy here and buy here. I can risk, $120 to make $378. Go risk a little bit more to make a little bit more. This one's not terribly expensive. So 110 to 120. Highs are on 122, lows are on 105. That's close. Let me check the break even. I'll build this one out. Paul says Roger's got his death on filling any gap. What's that mean? Meaning what? Death on filling any gap. Translate that into something useful. Pick the pain. Yeah, I mean, that's what I've said. I mean, the pain. Look, and that's it's the pain trade is. It's more like the pain and annoyance of like no pullbacks, no pullbacks, no pullbacks, no pullbacks. But here's the crappy part. I'm going to come back to OLLI in a second. If we do not pull back, right? If we do not pull back, all this is doing is inevitably getting so overstretched that we're going to have some reason for this thing to fall and fall. So my point is, he says there's no gap to fill. Well, I mean, in the futures market, there generally isn't. But no, I respectfully disagree with that. I mean, you don't see a lot of gaps in the markets, especially when it comes to the futures feeds. But you definitely have gaps in the futures feeds. So from Fridays to Mondays or Fridays to Sundays, there's a noticeable gap, which is usually not the case in futures. But there is still a big gap right here in futures. Okay, this is absolutely a liquidity level that the markets would be interested in trying to find. Again, I'm not bearish to go back and try to time this to fill the gap. Look, if the market doesn't want to go down, here's what happens to my portfolio. I will make money going back to all-time highs, right? It's going to be more like I'm participating. I have a positive drift in my portfolio. And if we get up to this point, if we hit all-time highs, I'm probably looking at, I'm up about 245K for the year. So if it goes up, I'll probably look at, 265, maybe 270 for the year. And I'm not like not over aggressive. Like I'm only, 45% invested in the markets. And, unfortunately I have a lot of cash that I'm just trying to figure out how to deploy it. So this is why I go back to my thumbnail, which is looking for income. I mean, if the market goes up, fine. I'll make money. If the market tilts higher, I'll make money. I'm not fading this bullish train. I'm not fading it. But I'm frustrated because I want to deploy new capital, right? I want to deploy capital here. I want to deploy capital here. And I don't know if we're going to get much lower than that. I mean, honestly, you look at all of this support and resistance. I mean, this is the major level right here. If we pull back between 57 and 5,500, that might be about as good as it gets. Because if this market's coming to all-time highs and it's one of two ways, right? Either this market keeps going higher, 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 higher until we get there, okay? Or this market perhaps offers a bit of a short-term pullback to then justify new positioning to take this up to all-time highs. But I will tell you this, there's going to be a lot of frustrated money managers, a lot of frustrated, participants in the market that watch this market go to all-time highs and think about how stupid this entire correction was. Because the only time to participate in this trade would have been on the right-hand side of the trend line, and it's been just pure melt up. I look at this and it's like, this isn't really a dip to fill. That's not really a gap. It's like, I guess, but you're trading this thing like 20% off the lows and you're buying it. I don't know. So I just paint me frustrated, but I'm like, I'm not trading bearish. I'm just frustrated. Like I want to be in the trade and I'm not getting any real entry that I'm happy with. So what I'd like to see is, a little bit of indecision still, maybe another pullback to this level, and I can position for that. Maybe a pullback a little bit deeper, I can position for that. That allows me a chance to participate, right? But going to the upside without having anything more than just a pause, I get it. But hitting this high to me spells oversold or overbought conditions with divergence, and I think we're still due for a pullback. And would anybody be surprised? Let me ask a question here in the chat. Would anyone be surprised if we go from this high to this low with a 20% pullback? Would anyone be surprised if we hit highs and we go down 10%? I wouldn't. Would be surprised if we go down 20%? I wouldn't. Like this market could do whatever it wants to do. But I don't think that the, little 2 to 3% pullbacks is like, well, it's just nothing but buy the tiny little pullbacks again. I'm just not there. So anyway, that's why I went to the futures market, because rarely do we see futures gaps like this that go unfilled. Here's a good example. Okay. This market, did it come back? Yes. Right? It took a while, but it got there. So when we leave this gap here, did it get back to it? You can see this gap here, right? There's a gap. Did it get back to it? Yep. That was why I was bullish. I was trying to hold out for that cluster and that level to get filled. It happened. So now that we've done it to the upside, I mean, this to me is a noticeable gap. This to me is a noticeable gap. And this to me is a noticeable gap. I would be gladly positioning on the futures market for any of these trades. Buy the dip, buy the dip, buy the dip. I'm still bullish, right? If it happens, I'm buying the dip. If it gets to these highs first, I'm hoping that this market at least has a pullback. So anyway, I do have a lot of cash on the sidelines. I'm about 55% cash right now. That's getting the BIL trade, which is trading like a short-term treasury. So if I hold it from now to the end of the year, which I won't, but whatever I'm holding in is going to be roughly annualized around 4.3%. I want to allocate cash. I hate having cash like not used, but I obviously want to have opportunistic cash and liquidity where if I see a good opportunity, I can take it. So anyway, that's what I'm going on. It's been a long bull run. I'm tired now. Yeah, it's been an interesting melt up. I mean, the fact that we got right back to, I mean, again, this is just talking technicals here. The fact that we got right back to this high and gapped higher, right? Like that to me was me frustrated, because I'm like, are you kidding me, dude? So I thought, okay, we blow the top off and then we come back and retest it. Well, we did, right? But now we're not closing above these highs. So I just don't see this as the only spot to get in. As a bigger buyer, I don't see that to be the spot to get in. So, I mean, at the very least, it's like, will this market come back and retest it again? Do we have all these support levels? Look at all these moving averages. We've now spent 1, 2, 3 weeks above the EMA clusters. So the probability is this will stay bullish. Like this is a bullish trade in my opinion. So everyone arguing about, recession is coming, this is a bull market, this is a bear market rally, blah blah blah. I don't think the markets do bear market rallies without all of a sudden rolling over hard, you know? And so if we hit this level and roll over hard, then I would be more inclined to say this might be a bear market rally. But the fact that we got above this resistance and now it's acting as support, I think this market, just continues to try to go higher. But I'm hoping we at least get a test of some gaps, And like I said, if we don't, I'm not shorting this market. If it goes up higher, I just know that I'm going to have like a drift in my portfolio. I go from about 245 up to maybe 265, and that's okay. It's okay. But if I'm generating, $3,000 of income this month and $3,000 of income next month, it's okay. It could be worse, right? I mean, we could be dealing with this again. It could be here. We could be wondering what on earth is going to happen. Is the financial market going to end? Are we disrupting the entire global economy? Like all those narratives have been put to rest for now. Could they stir the pot a little bit more? Sure. Could they get a little bit messier? Sure. Do we ever know what Donald Trump's going to say? No, never. Is the Fed going to do anything wild and crazy? Probably not. So anyway, we'll see what happens. But I just hope there's some semblance as we get into, June, July. Usually, this is why I say it's the pre-summer push, not the sell may go away, right? In fact, I did see, let's see, Charlie Bolello, my guy I follow on Twitter. Let's go X. Charlie Bolello here. So he posted, he had a nice little video this weekend. This is price to earnings. Oh boy, that's interesting. Waymo's paid driverless trips is just skyrocketing. Oh baby. Anyways, it was this week in charts. We have money supply increasing. I'm looking to see there's earnings growth. What was I looking for? There's your money supply. So U.S. money supply since the peak in 2022 has exceeded that now. What is this? NVIDIA? Yep, NVIDIA it's outlier earnings behemoth. Returns in May, one of the best Mays we've had since 1990, 6.3%. This is the sell in May, go away. So if you go May to October, so returns, meaning like you sell April 30th. Now, last week we talked about this, and I did a sell in May, as in like May 30th you sell, June, July, August, September, October. Okay, now there actually was a discrepancy here. So I'm gonna write this in the top here. So if you did my version of sell in May is sell May 30th. Okay, that was my version. And the reason why is that actually did show a pretty decent discrepancy in performance. So if you go June to October, the annualized gain is around like 3.3%. And if you go November to May, that's around 6.3%. Okay, so it's just a tweak in the data, but it does make a big difference. I'm a big believer that this whole pre-summer move of, late March into April into May tends to establish a trend and a drift. Even though volume slows down, even though direction and volatility typically slows down in the summer, you still see positive flows June, July. But June, July, any type of flows tend to have a bit of a pullback or pause or correction in August, September. But obviously, over the course of the last 90 years, we still make money longer term. But if you want it to be just a bull and avoid some of the chaos that happens maybe in August, September, then you sell at the end of May. And I'm not prescribing this. It's like I don't do this. But if you sold at the end of May and you just stayed out of the market until the end of October, get back in November. November to May is usually a pretty good window. Markets don't have a lot of disruption outside of maybe a February dip or pullback. Obviously, COVID was a nasty February to March. This year was a nasty February to March and April. But overall, it actually pays pretty well to be participating primarily November to May. But my version of sell in May is going to hold stocks, hold positions in full until May 30th. Then you sell early June, right? So this shows this is Charlie Bolello. He's talking about holding May to October, November to April, May to October, November to April, it shows basically you make the same amount of money. But if you change that by 1 month where you hold stocks until the end of May, June to October is way less. November to May is way more. So there's just difference of, I think sell in May is sell at the end of May as opposed to you sell the beginning of May. If you sell in the beginning of May, you're missing out on typically a pre-summer push, right? And that April-May momentum can carry into a June, July drift. And a lot of times August, September is a pullback or a correction. Okay. Jan says took 57% of the first iron counter this morning. Good, Jan. Holding that thing a little bit longer. Nice job. Nice job. Very good. The Fed isn't cutting. We'll see. I mean, they're not supposed to cut until September. That's what and again, that's the problem with the transparency of the Fed is they're trying to tell the markets exactly what they're going to do, right? So if you go probabilities right now, I mean, the percentages are changing a little bit. This was 97 last week and 77, but still a pause. If you go into, September is about a 55% probability it's going to be a 25 basis points cut. This would be the first cut since December of last year. They cut in September, November, December last year, right? They did 50, 25, 25. So they cut 100 basis points last year, and the yields went the opposite way. And now they've been waiting and waiting and waiting. So are they going to cut this year, September? I think it's going to depend on what yields are showing us. 10-year yields are still not going down. And so if the Fed is cutting this, and again, I'm not going to beat this up even any more than I've repeated for months now, but let's say we get to September. Like this could oscillate for a while. Nothing really dramatic happens. I would say this though, if we go higher before the Fed cuts, if we're greater than 5% or 6%, that is going to be a big halt to global growth. It does attract the TNT or TLT and chill. It does attract like the bond risk free and chill. But it does put a real damper on growth. I mean, I don't know who wants to take the type of risk. I'll ask you this: how many of you want to take about a 15% risk in your portfolio to make about maybe 7% a year? Right? When you can take, and again, this isn't guaranteed, but to take essentially 0% risk and make about 4 to 4.5%. And if this goes up to 5%, it's supposed to be the same thing. You take 0% to make 5%. I mean, a lot of traders, or I should say fixed income investors, might still look at this and say, well, that seems like a better opportunity. A lot of financial advisors would be parking money into fixed income, even though I think bonds are trash. I don't want to be in bonds. But if it's effectively zero risk, I mean, it doesn't save you from the price. But if you hold to duration, this is why I don't want length. I don't want a 20-year bond. I don't want a 10-year bond. I don't want to sit and hold this thing to maturity. I want like a 3-month bond. Right? I want a 6-month bond. I want maybe 12 months. If I'm going to go illiquid, tie me up for no more than a year. And what can my yield be? Right? Look at the US 1 year. US 1 year. Okay, there's a 1-year government bond yield. We're trading at 4.13. So if I was willing to tie up my capital for a year, make 4% on that money, it's essentially risk-free. It doesn't mean that we have to, look, the nice thing is even if this goes down, if I hold it, I still get maturity at 4.13%. That's why it's risk-free, but you have to hold it to duration. The problem is what happened in 2023 with Silicon Bank and First Republic and some of those other regional banks is they were forced to have so much money in 10-year bonds and 20-year bonds that when it came to them needing to provide liquidity, they were insolvent. And that's mandated. So there could be, again, we could have some interesting like bank failures, but the Fed's going to step in and do something like that in 2023, right? So anyway, this is what's going to make investors think about it. If you go from, like I said, if you go from about a 15% drawdown to make about 7% gains, that's, not great, but that's historically what the market does. If you risk 0% and hold it for about 4 to 4.15%, that's pretty enticing, especially if this starts to grow higher, right? If I can make 5% with no risk versus 7% with double the risk, why would I take more risk? But you got to hold it to maturity. The last thing I want to do is I don't want to be in bonds for more than a year or two, and that's even hard. Like I don't even like them. Partly because we're just seeing a drawdown in price. Ryan says, I see Burry went all in an Estee Lauder. Follow him on the China play, but I'm not sure. Estee Lauder, huh? What's the play? Is it EL? I mean, it probably shows. Ugh, it just seems like dead capital to me. So it's down 87%. So EL. So below estimated values, earnings are forecast to grow. Oh my gosh! I mean, that's a pure value play if you ask me. 1.6 price to sales, fair value. I mean, it's trading undervalued or against its peers. I've traded COTY before. I haven't traded the other ones. These are just really inexpensive price to sales. Well, I mean, the nice thing about Michael Burry is he's not emotional. I think he's a numbers guy. But obviously he's willing to hold things until he's right. We do have oversold conditions with divergence. How much lower could this go? Well, there's weekly oversold conditions with daily oversold conditions. We have a nice little move from around $50 to 66. I don't think that the bottom is necessarily in or guaranteed, but let me check. I mean, if this bottom is in, this could be like poised for a bounce back. I mean, that's all I would say. I mean, we're going back to, I mean, the weird part about this stock is how many stocks do we see there below COVID lows? Not very many. Like this was COVID. This was 2018, 2019. Like how the heck are we, so much lower than those? We had a little response, right? A little response off of COVID lows, but then it's still further down. So, yeah, who knows? And honestly, I don't think he's just all in without having a hedge. I think it'd be silly to have this thing in without a hedge. So let me see. Where's the IV rank here? I've got to leave in about 10 minutes. Let's go EL for Estee Lauder. Could I sell a put at, I don't know, maybe $25? Right now, going out about 46 to 100 and some days. So that's a big jump in expirations. If I go out to January, let's see what the 30 and 25 puts are. Let this option chain fill up. I mean, yeah, I don't know what he's doing. I mean, I for one am not seeing an option trade that I'd really like. So I'd have to go down to like the 45 by 40. Maybe that's an income trade, but I'm guessing I'm going to get like 45 cents to $1. So if I were to buy the 50, sell the 45 with two contracts, I get 70 cents in that trade. That doesn't get me excited at all. I move that one strike lower, I get 45 cents. I mean, that's a terrible trade. Now I could own it cheaper, right? I'll say this. If Estee Lauder comes down to like 20 some dollars, I'm going to change this alert. I mean, you can already see it. I've already had this thing planned for a while. If we come down to 20 bucks, so somebody was asked this a while back. If we come to 20 bucks, I'll take the trade. We are getting oversold conditions now. If I wanted to, I could take a trade like this. I don't know if it's going to be any good, but I could build in a little bit of a trap here. Let's find out. When do we have earnings? Earnings is the 20th of August. Do I have enough precision here? I don't think I do because earnings, we have a September expiration. Crap. So could I get a butterfly spread in here if I went 40? Can I pin this thing at like 45? Let me put in a put fly. So if I pin this thing 45, 50 by 45 by 35, this one's not bad. So pin this around, this is a low at 48. I could pin this thing around 45. Expected move, and this is through earnings, $11. Current price is 66. I mean, this trade is totally fine for a small income trade with a profit trap. If I went a little bit wider, it doesn't give me any more premium, so I might as well just keep it here. So I mean, I'm risking about $460. I can trap this thing with a broken wing butterfly for $530, but the realistic trade with the probability is an income trade around 36 cents. Okay. So again, I look at the opportunities like, okay, I'm interested. I bid on like, Michael Burry's in it. Okay, cool. Why? Fair market value, discounted cash flow, oversold conditions down 86%. Technicals look pretty decent. Um, I mean, is healthcare and beauty a thing that people pay through? Maybe. I mean, but this trade, it's like I like the structure here, but I'm not super excited about making $35. This is probably the outcome of this trade, right? I make $35 income. I do have a potential profit trap, which would pay. I mean, this would be nice to take. However, if I hang on to this trade through earnings, I mean, earnings isn't even on the Tasty trade, but earnings here pops up. I mean, I'd have to sit through earnings through August, hold it for another month. That's the only way a butterfly is going to pay me, right? So if we go through that level, I mean, if we go up, I'm just looking at an easy $35. If we go down, I want to see if that profit trap sticks. If I sell a put, I mean, I'm almost better off. Like, how much do I get if I did a? Let me clear this for a second. If I did like an at the money put right here, if I just sell the, I mean, the $50 put, only get 56 cents. That's garbage. So expected move is 11 bucks. Let me see if I can do a put fly. Let me pin this thing on the expected move. Maybe this is a little bit better. What? How's that even these bid ask prices must be way off. So it's $1 debit for a broken wing butterfly. That doesn't make any sense. Now it's 27 cents credit. Yeah, I mean, whatever. I just think it's a rough trade. Um, so look, I'll go back to my original. If this thing comes down to like 25 or $20, I'll probably do something with it just because it's a stab. What I was looking at here is what do I get for like a 30-day covered call? An at the money, and this is where I kind of assess a lot of my covered call premiums. I mean, our IV rank is only 19.3. And even for an at the money call, I'm only getting $3. So I mean, if I owned it at 20 some dollars, I get $2 to $3. Is that good or bad? It's just not enough premium if you ask me. I get $3 on a stock that's trading for 66.73. I'm getting a 4%, 4% yield. Okay. I've seen better, right? Fresh highs on EWJ. That's my trade on the Nikkei. So EWJ, fresh highs for the Japan fund. My dollar cost averaging is looking pretty good. So level 1, level 2, there's my break even. And we're ripping up here towards new highs. This is, again, above the July high from 2024 when the market kind of deleveraged on the Japanese yen. Hopefully this has higher highs to go. I do wonder, this kind of goes into what I talked about this morning, dollar yen at 142. This is a really important Forex trade to watch for 2025. If this floor at 140 breaks, that could be like very consequential for the Forex market and potentially a very damaging move for the dollar. If the bond market gets into trouble, it's because we have a weaker dollar. This is a good indication of how this dollar could get super, super weak. So anyway, that is helping my euro dollar position. I'm long euro dollar, and I'm currently up about 250 pips right now. So if we hit my profit target, hopefully this happens either before or during ECB on Thursday, right? Is he Kramer's brother? Yeah. I mean that inverse Kramer ETF has been so. If you traded opposite of Jim Cramer, opposite of Kathy Wood, or the same as Nancy Pelosi, I guess you're the greatest trader in the world. Like last year, I think those relationships or correlations was like 60+% performance. Not too shabby. Anyway, here's currency strength on the day. I'm going to run here in just a couple minutes. So today we have New Zealand on top. CAD and dollar getting weaker, so my New Zealand CAD long is still looking better. Jeez, oh Pete, it just won't give me my swing. I'm trying to get in here like 81 and 80.50. Got a couple pending orders on New Zealand CAD. Aussie CAD, same thing. Pending orders around this 87.50 zone, hasn't happened yet. Aussie Swiss, I'm going to wait and watch, and this gets back to the 200 in this cluster, hanging in there. CAD Swiss, hanging in there. Euro Swiss, garbage. Pound Swiss pulled back. This one I wouldn't be opposed to getting back in. We pull back into this area here. I still like this run back into this pocket. So we'll run up here, pull back, swing trade opportunity for Pound Swiss. What do you think? Airbnb is Spain is cutting a lot of Airbnb. I don't know. I mean, Airbnb, I think, is at least an actual brand now. I mean, before it was a little sketchy. I was trading this thing around the $100 level. I made some pretty good ratio spreads and some income trades around the $100. Let's just check it out. Fundamentally, I mean, the question is this: how many people are going to stop going to Airbnbs? I mean, it's. I mean, some people actually, it's the first thing they look at. Hey, we're going to stay somewhere, taking a vacation. Why? You can bring your dogs, you can bring your families, you can have multiple people stay together versus like a room for two and have multiple hotel rooms. I mean, Airbnbs have become an entire business. Maybe to the point where people are overextended. But if you locked in rates during COVID and you've got multiple Airbnb properties, I would say that most asset owners for Airbnb properties or those short-term rentals are probably doing okay. So what slows it down? Overall economy cycle. If people stop traveling, people are cutting back, then this will be just as cyclical and economical as everything else. That being said, I mean, if I had a chance to look at Airbnb back around $110 or $100, I'd probably take more trades. This trade, I took profit on it. It was $1.74. I think I closed it out for like a 10 or 15 cent winner. Like I took $1.74, I closed it for like a 10 or 15 cent debit. So I ended up making like $1.40, $1.50 on the trade. That didn't take long. I sold it basically back in April. If I went out further, I mean, I could probably do the ratio spread. Let me look at like let's go further out. So let's go, oh boy, January 2026. Let's go to Airbnb, January 2026. I still have a ratio spread on Airbnb right here. I took this for my project options edge. I'm up $529. So that ratio spread is up around 50%, up around 50%. So, I mean, I've already taken the exact trade I was going to outline. So, I mean, I've got max profit here around $1.74. So anywhere between 1, 2, 3, 4, 5. So $1.74. So $870 on Airbnb without ever owning the stock. Yeah, not paying. So they clamp. Yeah, I get it. Oh, so Spain clamps down. Yeah, I mean, okay, so it's one state. So does that mean it's going to spread all throughout Europe? Is this something that's going to damage their? I mean, is Spain responsible for the entire tourism of Airbnb? Rentals? Probably not. If it spreads throughout Europe, then maybe that's a problem. But if it's just Spain, and I don't know why, it's like, what exactly would be the reason that Spain is cutting back? Are they having like big hotel companies lobby against it to say that they're damaging their revenue? I'm not really sure why it would be just a reason to clamp down. I mean, like I said, my bigger concern would be that people just stop traveling and people that hold Airbnb properties are all of a sudden sitting on mortgages that they can't afford because there's nobody traveling. There's nobody paying those short-term rentals. So until that happens, I think Airbnb is fine. But that's my trade. So I'm still in this trade. All right, we got 2 minutes for the close. I've got a webinar here in 2 minutes. I'm going to take a small break, catch my breath. And if you'd like to jump into that webinar, you're in my Telegram channel. It is right here. So we're live in just a couple of minutes. So my pinch point scanner, we did end up taking a fresh trade today on KMI. This populated in my get set filter. I've got some actionable stocks today as well. I took a look at some of these last week. I priced this one out. So this one is in. So I'm in a trade here. I priced one out. I didn't like the pricing. I'll take a look at this one and this one. I priced this one out last week and didn't like it. Plus it's low volume, so that one's off the list. But TSN and GL have populated new on my pinch point scanner, and then I've got some get sets that are new as well. I think I'm in 10 trades total right now. Since this last week, Wednesday, I'm in 10 trades total. So still active. I mean, last week, Wednesday to today, I've taken 10 trades and just hopefully some great setups. That's what this scanner is for. Find me some good trades, ready to move, prime to move. And that's what the webinar is going to be about here in just a minute. So anyway, I'm jumping into this webinar. Here is my Telegram if you'd like to join. So click on this and I'll post this. Chris Pulver Telegram. Free to join the public channel, and 4 p.m. webinar for my pinch point scanner. And all this week I'm doing master classes on it as well. So, all right, that webinar is starting here in just a couple minutes. So there's the link if you'd like to just register for it. There you go. Okay, let's dive in. All right, I will see you tomorrow for the final hour. Classes resume as usual for the normal day. 4 p.m. webinar, start now. All right, thanks everybody. See you, bye.